All right, well, let's break down the highlights from the Fed's press conference now with our very own Brian Cheung, who is back with us. So, Brian, what stood out most to you?
Yeah, Rochelle, well, it was a very eventful press conference. It's been an eventful day, really. But when you talk about just kind of the big takeaways from the press conference, obviously he expanded on the idea of why the Fed needed to move by 75 basis points or 0.75% today, obviously referring to the consumer price index report that came in hotter than expected last Friday. The Fed chairman reminding essentially markets that, quote, our policy is adaptive and it will continue to do so. You saw the revival of the phrase data dependency. This is despite the fact that the guidance from the Fed chairman, as you were just discussing with your previous guest, is for something either 50 or 75 basis points in their next meeting, which, by the way, will be happening at the end of July as scheduled. Now, that's offering some guidance and takes essentially that 100 basis point hike that maybe some markets are speculating off the table, at least for July. And that kind of makes sense. That was the natural question, given that the progression of rate hikes so far in 2022 was 25 basis points earlier in the year, 50 basis points in May, and then 75 basis points in June. Of course, if you continue to draw a line there, how much higher do you have to go? The Fed chairman essentially setting a cap, at least for right now, of 75 basis points. Now, a lot can happen between now and then, but the Fed chairman likely emphasizing that they want to have the flexibility for policy in the future. Now, on inflation, the Fed chairman saying that this is something that's not going to be very quick and it's not going to be easy. He offered a very simple line by saying that inflation needs to flatten out before it can decline. Haven't necessarily seen signs that it has flattened, at least on the consumer price index. So that's one reason why the Fed needs to give a little bit more optionality going forward. Now, one last thing I want to mention is that the average American is feeling this. They're talking about the concerns about a recession. And my question to the Fed chairman in the press conference was essentially, does the Fed's outlook on the economy line up with the concern that Americans have at the dinner table? Take a listen to his response to that question.
Clearly, people don't like inflation a lot, and many people are experiencing it really for the first time, because we haven't had anything like this kind of inflation in 40 years, and it's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways, and we understand that, and we understand the hardship that people are experiencing from high inflation, and we're determined to do what we can to get inflation back down. So that's really what we're saying. Clearly, it's an incredibly unpopular thing, and it's very painful for people. So, but I guess what I'm saying is the really critical question from the perspective of doing our job is making sure that the public does have confidence that we have the tools and will use them, and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
The Fed chairman saying it straight, no one likes inflation. With regards to concerns about a recession, he added in the press conference, quote, not trying to induce a recession now. Let's be clear about that. Guys, the next 12 to 18 months will be the bearer of whether or not that does actually happen. Guys.
And Brian, the word transitory is long gone. The word nimble is back. And he kept on bringing that one back and adding others like flexibility and having the ability to adapt. Why do you think that shift in tone from taking 75 off the table in the prior meeting to now clearly saying everything is? And maybe it was just me, but I was dumb and dumber there. 100 points sounded like, so you're saying there's a chance, it's at least a possibility at the next meeting. What do you make of that shift in tone?
Yeah, it was a real neck breaker getting to the meeting today, essentially, because if you rewind to last Thursday, markets were pricing in only a 3% chance that the Fed would move by 0.75 of a percentage point. Of course, the big difference was, first of all, the CPI report that we got on Friday, and then a record low print on the University of Michigan's consumer sentiment. Now, of course, the Federal Reserve is quick to point out that when the Fed laid out the game plan for the last 5 weeks for a 50 basis point increase this week, they caveated that by saying that would depend on the outlook remaining as it was at the time that they offered that plan. So the Fed has always said they've had the flexibility and they're wanting to do the same now. But of course, one natural reaction might be, well, why should we believe you on the guidance for 50 or 75 basis points in the July meeting when you gave us guidance for this meeting and then ultimately scrapped it last minute? That's certainly a valid concern. But the Fed, credibility is not following through necessarily on the forward guidance. Credibility is about the ultimate outcome of getting inflation down, which which the summary of economic projections show they hope to do next year by getting inflation down to something closer to 2.3%, 2.2% in 2024. But again, those are projections. Some of that might be optimism or perhaps aspirational from the Fed. But regardless, the Fed hoping they can get this done without triggering a hard landing.
Yeah, and you mentioned that University of Michigan consumer sentiment, which he called eye-catching, but then circled back and said, I see no sign of a broader slowdown that I can see in the economy. We just talked to Andrew Levin, who said he finds that too rosy, too optimistic. What about you, Brian?
Yeah, well, that's exactly the point of the question that I tried to ask him, which is that, look, at the end of the day, the Federal Reserve is saying we can achieve this soft landing, we can do this, but at the same time, you're seeing all of these readings on consumer expectations. It's not a lagging indicator, it's a leading indicator. What do you feel in terms of the right now? How much expenditures do you expect to have? The kind of inflation expectations that you have in the future, which remain high. That's something the Federal Reserve has not necessarily squared, but the Fed chairman saying they're aware of the fact that Americans are feeling this. They're aware that their mission is to get inflation back down. But of course, saying that and then actually achieving that through higher rates, that's something that the jury is still out on.
And made clear they will do whatever it takes. Brian Cheung, excellent job today. And as always, sir, thank you.